Hello everyone, welcome back to the channel. In today's video, we are going to understand one of the most important concepts in economics, the concept of cost. Whether you are a student or just curious about how businesses make decisions, this topic is essential. So let's get started. In economics, cost refers to the value of resources used to produce goods and services. But here's the key idea, cost is not just about money. Economists think of cost as opportunity cost, which means the value of the next best alternative that is sacrificed. For example, if a company uses a building to produce shoes instead of renting it out, the rent they could have earned becomes a cost. So we will just go through the different cost which is involved in economics. So here you can see cost is the value of resources given up to produce goods or services. It represents the opportunity cost of using resources in the next best alternative way, which I just told you. So there are different costs which we are going to cover in this video. The different costs that we are going to cover is fixed cost, variable cost, total cost, average cost, and marginal cost. Okay, so here you can see there is a table which is showing the output, fixed cost, variable cost, total cost, average cost, and marginal cost. And the same thing is depicted on a graph. So you can see the different types of curve. We have fixed curve, variable curve, total cost curve, marginal cost curve, and average cost curve. So we are going to understand each one in detail. So let's move on to the first type of cost. First is we will understand what is a fixed cost and a variable cost. So fixed cost in the short run they remain constant regardless of number of outputs produced. The examples of fixed cost are rent, salaries of management staff, labor's wages, permanent contract insurance, medical insurance for staff. Whereas when you see the variable cost, they change with the increase in number of outputs. I will give you example, don't worry. In my next slide, I will give you the examples of fixed cost and the examples of variable cost with a real life example. So just pay attention here. Fixed cost remains same, it do not change with the change in output. What is the name? The name itself, always try to understand the concept with the name. The name itself says fixed. Fixed means it will remain same, it will not change. Whereas variable cost is the cost which changes with the increase in number of outputs. So variable cost is taken from the word vary. Variable means vary. Vary means it will change. So you can remember variable means it will vary, means it will change with the change in output. Examples of variable cost are raw materials and part-timer labor charges. Now here we will understand the total fixed cost. So total fixed cost is the sum of expenses incurred on those inputs that remain same at different levels of output. Total fixed cost is graphically shown in the figure 8.1. It is what straight line parallel to the output or x-axis. Now TFC or total fixed cost is a total fixed cost curve parallel to x-axis. It indicates that it remains constant, it remains same at all level of output. So I'll just give you one example. If you take example, if you take a shop, so if I take a shop on a rent, so I have taken a shop on a rent, the rent is 100 per month, rent is 100 per month. So if in this shop, if I am making 5 products in a month, if I am making 5 products in a month, how much rent I have to pay? I have to pay 100 as a rent. If I am making 15 product in a month, if I produce or if I make 15 product in a month, how much rent I have to pay? 100. Same rent. If I make 0 product in the month, I don't make any product in the month, my shop is closed. So even if my shop is closed, I have taken the shop on a rent, I have to pay 100 real as a rent. Rent remains same. Rent do not change with the change in output. So if I am making 5 product, then also I have to pay 100 real as rent. If I make 15 products, I have to make 100 as a rent. If I make 0 product, I have to pay 100 as a rent. That is why you can see in this graph, on the x-axis we have plotted output. Output means number of product. And on y-axis we have costs. You see, the cost remains same. If the cost is 100 real, if the cost is 100, the rent is 100, it will remain same. If you produce 0 product, then also 100 you have to pay rent. If you make 5, you have to pay 100 as a rent. If you make 50, you have to pay 100 as a rent. So it remains same, it do not change. So example for the fixed cost is the rent which we pay for a shop. We will take the next one. So I will explain this with a example. Now we will see total fixed cost, it remains same. Now we see in this graph, in this table you can see if one product is made, the cost is 300. Example, the rent. If you produce 2 product, you have to pay 300 rent. If you make 3 products, you have to pay 300 as a rent. You make 4 product, you have to pay 300 as a rent. So the number of output is increasing, but the fixed cost remains same. So fixed cost do not change, it remains same. It do not change with the change in output. Okay, example, I just told you what is the example of a fixed cost. You pay a rent for a shop. I hope this point is clear to everyone. Now the next concept is variable cost. Variable cost, I told you, total variable cost means it will vary. It will vary means it will change with the change in output. So total variable cost is the sum of expenses which is incurred on those factor inputs whose quantity varies with the change in the level of output. Now total variable cost curve, you can see TVC, total variable cost, is shown in the figure. It has inverse S shape. So total variable cost increases as the level of output increases. So here again I will give you example. The example of a variable cost is, you can say it is, the example of variable cost is raw materials. So just pay attention, I will take one example. If I have a business of making a furniture, if I have business of making a table. So for making a table, what is the raw material? For making table, I need wood. So if I am making one table, how much material I need? I need 1 kg of wood. So 1 kg of wood will be for $1. If I make 3 tables, I need 3 kg of wood. And 3 kg of wood will come for $3. If I make 5 tables, output is 5. So I need 5 kg of wood material. 5 kgs of wood. So 5 kgs of wood I have to pay $5. So here you can see my variable cost. This is my variable cost. If I make 1 table, my variable cost is $1. If I make 3 table, variable cost is $3. If I make 5 table, my variable cost is $5. So if I produce more product, the variable cost will be more. When you produce less product, the variable cost will be less. If I make 0 product, 0 table, I need 0 wood, there will be 0 variable cost. Okay, so variable cost increases with the output. I hope this point is also clear to you. Now here we can see, here it is the explanation. You can see variable cost again explained in this table. When the output is 1, variable cost is 50. When the output increases to 2, variable cost also increases to 90. When we make 3 product, variable cost is 120. We make 4 product, variable cost is 150. 5 products 190 and 6 product 270. So you can see the variable cost increases with the increase in output. That is why it is called as variable. Variable means it will change with the change in output. Now the next concept is total cost. Now total cost to the producer for a various levels of output is what? It is the sum of total fixed cost and total variable cost. What do you mean by the word sum? Sum means we add. So here you can see symbolically how do we write? Total cost is equal to total fixed cost plus total variable cost. When we add fixed cost plus variable cost, we will get total cost. So you can see in the graph, the adjacent figure 8.3 shows the total cost of production, which is the sum of total variable cost and total fixed cost. So remember, total cost, how do we get? We just add total fixed cost plus total variable cost. When we add it, we get total cost. Now we will see another concept which we call it as an average fixed cost. Average fixed cost or AFC is nothing but average fixed cost is the total fixed cost divided by total output. So total fixed cost divided by total output, we will get the average of fixed cost. It is the per unit cost on fixed factor. Symbolically, it is written as average fixed cost is equal to total fixed cost divided by total quantity, where TQ is the total output or total quantity. We will understand this with the help of a table. So here you can see, very simple. In the first column it is mentioned total output, second column total fixed cost, and third column we have to calculate average fixed cost. The formula for average fixed cost is equal to total fixed cost divided by total quantity. So here you will see, for the first, when the output is 1, total fixed cost is 300. So what is the average fixed cost? 300 divided by 1 is 300. Now second, when the output is 2, the total cost is 300. It remains same. So what will be my output? 300 divided by 2. It will come 150. Okay. Similarly, when the output increases to 3, total fixed cost remains same. So how do we write average fixed cost? Total fixed cost 300 divided by 3. My average fixed cost is 100. The next one, the total fixed cost is 300 and the output is 4. So 300 divided by 4, my average fixed cost is 75. Then total fixed cost remains same, 300 divided by output is 5. So my average fixed cost is 60. Again, when the total fixed cost is 300 and the output is 6, my total fixed cost is 50. And again, when the output is 7, so 300 total fixed cost divided by total quantity 700, my answer will be 42.85. 42.85. So this is how we calculate the total fixed cost. Average fixed cost. Average fixed cost is equal to total fixed cost divided by total quantity. Similarly, now we will see average fixed cost. So average variable cost is found by dividing the total variable cost by total units of output, similar to that. So how do we write the formula for total average variable cost? We write average variable cost is equal to total variable cost divided by total quantity. Similar to average fixed cost. In place of average fixed cost, we write average variable cost and we will divide average total variable cost by total quantity. So we will again understand this with the help of a table. So here you can see this is total variable cost. So average variable cost is what? What is the average variable cost formula? Average variable cost is equal to total variable cost divided by output or total quantity. So here 50 divided by 1 is 50. Again, when total variable cost is 90, total variable cost is 90 divided by 2. Divided by total quantity, which is 2. So my average variable cost is 45. Then total variable cost is 120 divided by 3. So my average variable cost is 40. Again, total variable cost is 150 divided by 4. So 150 divided by 4. My average variable cost is 37.5. Again, total variable cost is 190 divided by 5. So I will get the average variable cost, which comes to 38. Then total variable cost is 270 divided by 6. So 270 divided by 6, it will come to 45. So this is how we calculate the average variable cost. Now we see this average total cost. Similarly, average total cost is the per unit cost of both fixed and variable input. So average total cost of production can be obtained by dividing the total cost by total unit of output, similar to average variable cost and average fixed cost. The another concept is marginal cost. Now marginal cost is what? Marginal cost is the addition to the total cost as a result of one unit increase in the output. It is expressed as marginal cost is equal to change. This is what? This what we have written. This it stands for change. This stands for change. Change in total cost. This is standing for change. So here you see marginal cost, what you should keep it in mind. Marginal cost stands for change in total cost. What you should keep it in mind, marginal cost, change in total cost. So I will explain you with this table again. So here you can see marginal cost. For calculating marginal cost, we have to take into consideration only the total cost. And what is marginal cost? Change in total cost. So when the output is 0, total cost is 1000 because this is a fixed cost. So the marginal cost will be dash. When the company is making one product, the total cost increases to 1300. So what is the marginal cost? What we have to see? Change in total cost. Marginal cost means what we will see? What we will see? We have to write here marginal cost means we have to see change in total cost. Change in total cost. So before total cost 1300, now total cost 1300, before 1000. So how much is the change? 1300 minus 1000. The change in the total cost is 300, which is my marginal cost. When the output is 2, the total cost is 1550. Before it was 1300. So how much is the change in total cost? 1550 minus 1300. So my marginal cost is 250. Again, when the output is 3, the total cost is 1800 minus 1550. So my marginal cost is 250. Again, when the output is 4, the total cost increases to 2200. So how much is the change in total cost? 2200 minus 1800. So the total cost changes by 400, which is my marginal cost. Again, when the output is 5, the total cost increases to 2700. So what is my marginal cost? Change in total cost. So 2700 minus 2200, my marginal cost is 500. Okay, I hope you understood all the things. Now we will solve all the type of cost calculation in this one table. Collectively we will be doing it. Okay, so like this we are provided with output 0, 10, 20, 30 and 40, and fixed cost is also given, variable cost is given. Now we need to find out, we need to calculate the total cost, average fixed cost, average variable cost, average total cost and marginal cost. So the first thing what we will do, what is my total cost? Total cost is nothing but fixed cost plus variable cost. So we will add it. Total cost is what? My fixed cost plus variable cost. So 10 plus 0 is 10. 10 plus 5 is 15. 10 plus 10 is 20. How do we calculate total cost? Fixed cost plus variable cost. So fixed cost 10, variable cost 15. So 10 plus 15 is 25. 10 plus 20 is 30. So this is my total cost. Now I will do, we will calculate average fixed cost. So average fixed cost, what do we do? Average fixed cost means what we will do? We will just fixed cost divide by output or divide by quantity. So what is fixed cost? 10 divided by 0, it will come dash. Again 10 divided by 10, 1. 10 divided by 10 is 1. Again 10 divided by 20, 0.5. Then 10 divided by 30. 10 divided by 30, it will come to 0.33. Again 10 divided by 40, 0.25. This is how we calculate average fixed cost. Then similarly we will do average variable cost. What is the formula for average variable cost? The formula is simple. Variable cost divided by total quantity. So here we will see this column, variable cost and output. So variable cost is 0, output is 0. Answer will be dash. Now variable cost is 5 divided by 10. It will come to 0.5. Again variable cost is 10 divided by 20. Again 10 divided by 20. We get average variable cost 0.5. Again 15 divided by 30. We get the variable cost 0.5. Again 20 divided by 40. The variable cost is 0.5. Now similarly we will do average total cost. So for average total cost we will consider total cost and output. So average total cost, the formula is nothing but total cost divided by quantity. So how much is the total cost? 10 divided by output 0. So it will come dash. Again total cost 15 divided by 10. Total cost is 15 divided by quantity. 15 divided by 10, it will come to 1.5. Again, total cost is 20. Output is 20. So 20 divided by 20 will be 1. Again, total cost is 25. Quantity is 30. So 25 divided by 30, it will come to 0.833. Similarly, the last is total cost is 30 divided by 40. So it will come to 0.75. Now we will take the last one, that is marginal cost. What I told you, marginal cost, what we have to see? We will write here change in total cost. We just see change in total cost. So we will see this column, total cost. So first is 10. We will take dash. Now when the output is 10, total cost increases to 15. So now the total cost is 15. Before it was 10. So 15 minus 10, my marginal cost is 5. Again, when the output is 20, the total cost is 20. Before it was 15. So 20 minus 15, my marginal cost is 5. Again, 25 minus 20, the marginal cost is 5. Again, what is the change in total cost? 30 minus 25. So the marginal cost is 5. So these are the different types of concepts in economics, which is very important for the producers to find out what is the cost of production and how they are going to make the profit. Okay, so in my next video I will be explaining you what are the concept of revenue. So cost is an expense which the company incurs, which they have to pay on producing a product. In our next video, we will be studying what is revenue. Revenue means the income which is generated by the producer or the company by selling the product. Okay, which helps them in doing the business. So if you like the video, just subscribe to the channel, so that you will keep on receiving the notification when I'll upload the new videos related to the course. Share it with your friends so that they are also getting benefited, and don't forget to like it. Okay, so we will meet again in my next video where we will be learning the concept of revenue in economics.